I've received a few emails from members that are telling me they're very confused by this market's price action, and to do my best to clarify and provide some clarity in this weekend video. Now, my first response to that is it's okay to be a little bit confused because the market's giving us mixed signals. We're in a correction, there's increased volatility, and the market's not always going to give us a clear picture. For example, this is a daily chart of the NASDAQ Composite. After we had the follow-through days in early April, and then we got back above the green line, the 21-day, and we were in a strong uptrend, and stocks were setting up and breaking out. That was a pretty clear signal to get involved in the markets and to increase exposure. Back in late February, when we broke down below the 50-day, and there was all this distribution, we were clearly in a downtrend, and that was a clear signal to raise cash and get defensive. My point, though, now is when we're around the 50-day and there are mixed signals, it's okay. The market's not going to always give us a clear picture. That's why I always say get a little bit defensive and be a little bit patient until the market provides us with clearer signals. Now, to let me reset the lines and give you my, sort of bigger picture view right now, or at least let me pull up the S&P 500, is that I feel this is a normal 8 to 12% correction within this uptrend here. I think it's very normal within uptrends every once in a while for the market to put in an 8 to 12% correction and visit its 50-day, and that's normal market activity. I've had some members ask me, what is keeping you so constructive on this market? What is giving you the conviction that we are heading higher? Now, my first response to that is nobody knows. I'm giving you my best professional opinion based on the price action of stocks and how I'm interpreting the markets. I feel that this is just a normal correction within an uptrend for three reasons. Number one, the price action of stocks. As I've said a million times, 90% of what I use to judge the health of the market is the price action of leading growth stocks. And as long as they continue to act well, even with this market pulling back in the last few weeks, there's been a lot of stocks acting well. And that's why I did that special webinar for you guys last Monday night to answer a lot of the questions I got and to give you examples of what I mean by stocks acting well and what's keeping me constructive. The second reason is the Fed. There's the old adage, don't fight the Fed. The Fed is providing us with an incredibly equity-friendly environment by keeping interest rates low and doing tons of QE, an unprecedented amount of QE, and Fed Chair Powell is saying that he's not going to end that anytime soon. When I go back to October of 2018, this is an S&P chart of early October 2018. Part of the reason for this ugly correction we saw in the fall of 2018 was Fed Chair Powell came out in early October, said, I'm planning to raise rates 3 or 4 times in the next year. Clearly, the market couldn't handle that. People had to do a lot of adjustments with leverage and so forth, whatever the reasons, and that's what led to that ugly correction. Right now, it's the exact opposite. There's no plans of raising rates until the end of 2023, and there's no plan on stopping this unprecedented amount of QE. So that's a big bullish backdrop for the markets. Now, the third reason is sentiment. I love how, went back to the NASDAQ here, I love how on this drop here, a lot of sentiment measures I've looked at have gotten unbelievably negative. There was even an article I tweeted out saying that NASDAQ shorts are their second highest level ever. A lot of sentiment measures are really getting people extremely negative on this market. The opposite happened when I talked about 2018. In October of 18, there was a lot of complacency, and people really didn't get negative until towards the end of December of 18, which helped to create a bottom in the market. So what I love here is that from a sentiment perspective, there's a lot of negativity, and I think that's why I'm saying that I just don't see this as an October of 18 scenario or even a March of this year, March of 2020 scenario. In other words, I can see this pullback, but I don't see any sustained downside for those reasons I gave out. Now, you might ask yourself, okay, if you're this positive and this constructive on the markets, why have you been cautious over the past few weeks? And there's a couple of reasons. First and foremost, I could be wrong. I've been around the markets a lot. I base my opinion based on what I'm interpreting and what I'm seeing in the markets, but I'm humble enough, and I've been wrong many times. That's why, in case I'm wrong, I reduce exposure, because if I'm wrong and we do head lower, at least I'm not fully invested in this market. The second reason is that seasonality. I've talked about this as we started going higher in late August, that I was reducing exposure and to get a little bit defensive because of the 6 reasons I've discussed in the past few videos, which is seasonality, with the 60-40 portfolio rebalancing was one reason. Mutual fund positioning was another one. The Jewish holidays that were coming up at the end of the month. We could just see a pullback, a normal pullback, to shake out some of the excess bullishness that happened in late August, early September. Also, just normal profit taking. Not too many people are just talking about a simple reason for this pullback is when you have this big move in the markets, you can't blame people for taking some profits and locking in some gains. And then the 6th reason was new IPOs and supply coming to the markets. These aren't exactly small IPOs with Palantir and Snowflake. In other words, some money managers might need to sell some positions to raise capital for the 10 or 12 IPOs that have come out last week and coming out in the following week. So that was why when people say, well, if you're this constructive, why was I talking about getting defensive and reducing exposure, is that I was expecting mostly some end of the quarter profit taking and portfolio rebalancing. Another thing I want to talk about is that if you do reduce exposure, let's just use round numbers, and you pull back to, let's say, 50% exposed here. Just to use round numbers, if I'm wrong and we break lower, then at least you'll know, and you won't have full exposure to the markets, and you hopefully don't get hit as bad. Then somebody will say, well, what if you're right and we just turn right around? If we turn right around, there should be no FOMO. In other words, fear of missing out shouldn't be an issue, because even if we get a follow-through day and we get back above the 50-day, that will hopefully be a signal for, what's the key word? Sustained. For a sustained uptrend. For example, when we had the follow-through days here in early August, it was April 2nd on the S&P 500 and April 6th on the NASDAQ Composite. I wasn't fully invested. I had a huge cash position around that time. And then as the market started to prove itself, who cares if you miss the bottom? The key is to get that sweet spot, or as Mike Webster calls it, that power trend. I would say the bulk of the money I made during this recent trend was right in this sweet spot here. So it wasn't on the dead lows and it wasn't getting the dead highs. It was in that power trend or sweet spot. In other words, it's okay to be lightly invested, and let's say we do turn around quickly, because that'll be a signal that the big institutions are coming back into the markets and that you can get more involved, and we'll hopefully have a sustained uptrend 3 to 6 weeks or possibly longer into the end of the year. Now, do I think we're out of the woods right now? Absolutely not. I'm still expecting some volatility over the near term, and we still have to get through there's only a few more days left in the end of the month and so forth. But I'm definitely more constructive than most people. I talked about being lighter invested over the last week or two. I did increase my levels towards the end of this past week, mainly based on the price action of stocks. And later in this video, I want to get into a focus list of about 20 or 21 leaders to focus on for the fourth quarter. So again, I'm basing this on the price action of stocks. However, know your time frame. Over the near term, we could still see a little bit of volatility, but I just don't see any sustained downside from here for the reasons I've mentioned, and that's why I got a little bit more invested this week, and I'm looking forward to maybe new money coming back in the beginning of the month and the beginning of the quarter, and the news cycle over the next couple of weeks to shift from the bullshit politics, geopolitical stuff back towards earnings as earnings season kicks in a couple of weeks. So let's get into index review, and we'll get into some stocks now.